This could be the end of the Mega Backdoor Roth IRA, not just for high income earners, but for everybody else too. There's a new proposal out. I want to go through it. I'm going to explain why I think this is going to affect literally everybody and not just high income earners. What's going on, guys? Welcome back to the channel. Or if this is your first time at our channel, my name is Travis Sickle. So this has been floating around for about a week or so on these changes to these retirement plans. And I just recently looked at it, but I want to go through basically as a first look and explain why I think this is not a good thing and why it's going to affect more than just high income earners. Because most of the articles that I've been reading and seeing out there is just for high income earners, but I think this is going to trickle down to everybody for the Mega Backdoor Roth IRA and making contributions to your retirement plans and a lot of retirement plan changes that's just going to make it difficult. So let's go ahead and pull it up on the screen and go through this together. So here's the proposal. So I'm going to scroll through this. Again, this is just a first look. I just looked at this morning. But the first thing that we want to take a look at is the modification rules related to retirement plans. Now, this is just a proposal. It'll probably get changed 1,000 times before it actually gets put into law. But contribution limits to individual retirement plans of high income taxpayers with large account balances. Now, some of these numbers might look really big, and they are, but I'm going to explain why they might not look quite as big as you might think at first glance, especially if you're a small business owner. So let's go ahead and scroll down on this. So the first thing I want to point out with the annual additions to IRAs or individual retirement plans. Now this looks like it's going to be capped if you're at either 10 million, right there. The term applicable dollar amount means 10 million inside of your IRA. Now that is a big number, 10 million inside of your IRA. And or your income. So if your income is at 400,000 for an individual, 425 for a head of household, or 450. Now this is what they're calling high income earners. And yes, it is a high income earner, but again, hear me out at the end. 450,000 for married filing jointly. So that means you can't make contributions into IRAs. Now, they point out that you can still do SEPs and simple IRAs. Now, if you watch some of my other videos, I've been talking a lot about switching over to the solo 401k, but that's not an IRA. So that's not including the solo 401k. So I don't think that you can't make that same contribution and that you shouldn't still consider the solo 401k over the SEP or the simple. So just wanted to point that out too. And over here it says adjustments for inflation. So beginning after 2022, that means these numbers are just going to increase periodically with inflation. That happens with most things. Now, here's another rule that they're going to do is special rules for individual retirement plans with excess annual additions. And I believe this rule is saying that they just want the information on any account balances with 2.5 million or more. You now need to report it to the IRS. Again, proposal, but they're going to make it reportable to the IRS. And, you know, it's just so they can figure out who has these big accounts or bigger accounts at 2.5 million. Just going to add more cost to it is what it's going to end up doing. And obviously it's going to make it more of a headache, especially if you're trying to save for your financial future, 2.5 million or more in each account. And the amount in which each participant is entitled, whatever, I don't know what that is. Increase in RMDs looks like, and I was most uncertain about this provision, but it looks like it's going to include your Roth IRAs in the calculation for RMDs. And they're trying to basically get the money out of these retirement plans, but it's like we want to have incentives to help you reduce your taxes so you save into retirement. But as soon as you have money in these plans, too much money in these plans by what they're saying, then we want you to take it out. So they're really trying to say you can only get these benefits if you're a low income earner or on the lower side of your savings. So that's really going to hurt a lot of people later on down the road as they're trying to accumulate their wealth and you're trying to save for your financial future and put a ton of money away. But it's just kind of defeating the purpose because all of these accounts at some point are already taxable with RMDs, distributions, or if it's going into the Roth, it's already taxed pre-tax. So that's one of the benefits or the incentives in doing so. And then, so we hit the IRAs at the 10 million or the 400,000 limit, the RMDs, the special rules. And now we're going to go ahead and scroll down a little bit further to, and this is again, just reiterating in all Roth IRAs and designated Roth accounts. So that's talking about the rollovers. So in doing a Roth conversion, now you can do a rollover and that's fine, but what they're saying is that if you're a high income earner, then you can't do a Roth conversion. So those are the limits. Now, here's the problem with that. The biggest problem I see, and I'm trying to see if there's any more text here by scrolling on down. There we go. I highlighted it. Rollovers and conversions limited to taxable amounts. So here's the problem that we're looking at with the Roth conversions. So a Mega Backdoor Roth conversion, if you're trying to accomplish it, you're primarily looking, if you're a small business owner, you're probably looking at a solo 401k, putting a bunch of money into these plans, and then converting it over to the Roth side, because you can't put a profit sharing contribution into the Roth side. You can only go up to 19.5, and that is the employee side of it. So any of your profit sharing or your non-deductible contributions go into the traditional side. But in order to make that conversion, that's what this is saying, rollovers and conversions limited to taxable amounts. So this is basically eliminating that Mega Backdoor Roth IRA strategy. Now, here's why I think it will affect everybody. If you go to any financial institution, and I was looking at this last week, trying to figure out which financial institutions will allow you to do this right now, and basically none of them will. Because if you open up a solo 401k, just plain vanilla plan, in order to save costs, and this is really pennies on the dollar to the financial institutions, so I don't know why they don't offer it, but you can't just go in and do a Mega Backdoor Roth. What you need to do is have plan documents that allow for it. That means you need to go and get plan documents. Probably means another cost. Right now, it's a few $100s in order to do that at most places, about $400 or $500 in order to get the right plan documents, in order to do this type of strategy. Now, if you need more help than that, it's going to be even more expensive. But that's today's cost. And that means that probably most of the people that are on the higher end of their incomes are trying to do these conversions. Means that the businesses that are going in and setting up these types of documents think, okay, well, this is our market group, so we can sell to these people these plan documents, and you go out and buy them. But if they eliminate most of those people, they either have to increase the cost or they're going to say, forget about it. We're not going to do this. No, why is this going to affect them? Is because they're going to increase the cost or they're not going to do it. So you can't do it either. So if you're lower income, then you're not going to have the ability to do this, because this is going to be the effect of it. Now, here's something that I don't think that the legislatures realize, that if you wanted to do your own plan documents, you can do that. But it's going to be now thousands of dollars in order to do these plan documents. So even if you get the right provisions, even if you go talk to an attorney and they write it all up, then guess what? Now you need to submit it to the IRS, because then they need to approve it. But they charge thousands of dollars to do it. So what are they're not even TPAs or third-party administrators. They're just going out and creating these plan documents and selling them. But they're bearing that cost. They're going through and saying, listen, we'll go through, we'll do this. Why aren't the broker-dealers stepping up to do it? Because it also has to deal with reporting as well. And they don't want the masses going out there if they're not ready to tackle that issue, saying you're going to have to actually report this stuff. So if you're doing conversions, you're dealing with 1099-Rs, and you got to make sure that those get reported. And the broker-dealers don't see it at this point as a financial thing that they really want to tackle, because you're seeing fees get compressed everywhere. So there's no trading costs, and they're trying to figure out, how do we make money by still giving free trades, and how we're going to make this all work. And that is the reason why I think it's going to affect everybody. That there is just not going to be something that you're actually going to be able to do. You're going to read it in the law and then say, hey, I want to go out and do this. But then the costs are going to skyrocket. It's going to shrink the amount of people that can actually do this at that point. So they're going to have to jack up the price, and it's going to make it really difficult. And then I said I would talk about the high income earner at $400,000, why I think it's ridiculous. Because as a small business owner, think about this, right? First few years you're in business, you probably weren't making a whole lot of money for the vast majority of small business owners. So you're kind of playing this catch-up game. So what if you're running at a loss year one, a loss maybe year two, breaking even year three? Now you start making a little bit of money, but you couldn't save anything. It could be several years. And then all of a sudden, boom, your income spikes to $450,000 or $400,000, whatever it is, right? So you're at that income level, and now all of a sudden you have a cap and you can't do it because you earn too much money. But you're thinking, like, what about all those years that I couldn't do it because I was trying to start this business up? I was trying to run the business, but you can't do it. This seems like a raw deal to me. So I don't like that income level. It's just not where it needs to be. It should be significantly higher than $400,000 for a small business owner. That I don't think is a good deal. I don't think this is the right move. I don't think the legislatures even realize how difficult it is to even do this stuff today, that it's actually creating revenue for the IRS and the government because they charge to put these plans together. It creates more revenue by charging more fees to set this stuff up or submit the documents to the IRS for review. So they're going to eliminate all that and not realize that other people who don't make $400,000 would look at this and say, hey, I just want to kind of save a little bit more. You're not going to be able to do it. So that is a terrible thing that they're doing to retirement plans, in my opinion. And let me know in the comments down below if you agree with it or disagree with it, that doing this won't affect you. Now, let me know if you've done a Mega Backdoor Roth to your own accounts and what those costs were. Or if not, just go ahead and look in the description and email it to me, because I'd be really interested to see what other people are paying for it. Because what I've seen is there are a little bit more costs, and it does make sense today, but I don't know if it will continue that way down the road. So I don't know. I'm gonna go ahead and report on this stuff more as we move forward on it. And if you've seen anything, let me know in the comments down below. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.